Hello everybody and welcome back to Sam's Finance, where I talk about personal finance, companies and their stocks. If you are familiar with Mondelez at all, you might think this company has only been around for a couple of years. This is true on the one hand, but in fact its roots are at least 100 years old. Join me for the history starting from America's cheese business to the world's biggest biscuit maker with a whole lot of high school drama in between. As with all my company analysis, those are the topics covered. With John Deere, the focus was on agricultural machinery. For 3M, I went through their whole very unique product portfolio. With Mondelez now, the focus lies on its history to understand the food business and the connections to other big players like Kraft Heinz. I can promise you there's always going on a lot in the food business. Mondelez might seem pretty young because it was only in August 2011 when Kraft Foods announced plans to split into two publicly traded companies, Mondelez International and the Kraft Foods Group. So from 2012 to 2020, that's roughly 8 years. Let's get back to the beginning. In 1903, James L. Kraft immigrated from Canada to Chicago and starts a wholesale door-to-door cheese business. In 1909 then, James Four Brothers joined the business and formed the J.L. Kraft & Bros Company. In 1915, the company invented and patented pasteurized processed cheese that did not need refrigeration, giving it a longer shelf life than conventional cheese. In 1924, the company changes its name to Kraft Cheese Company and gets listed on the Chicago Stock Exchange. The New York Stock Exchange listing followed 2 years later. In the following years, the Kraft Cheese Company began to consolidate the US dairy industry through acquisitions competing with National Dairy Products Corporation and Borden. In 1928, the Kraft Cheese Company acquired the Phoenix Cheese Company, the maker of Philadelphia cream cheese, and changed its name to the Kraft Phoenix Cheese Company. In the late 20s, the Kraft Phoenix Cheese Company was about to be bought up itself, even though at the time they were the third largest dairy company in the US after National Dairy and Borden. Later in 1930, the Kraft Phoenix Cheese Company was finally bought by National Dairy, that at the time was 3 times as big in terms of revenue, and National Dairy ran the combined management under the National Dairy name. So the Kraft name vanished for a few years. In the following years, the former dairy-only product lines began to diversify to caramel candies, macaroni and cheese diners, and margarines. This trend only increased in the 1950s when National Dairy began to move away from low value-added commodity dairy products until the primary remaining dairy product was only cheese. In the 1950s, the two founders of the National Dairy Company and James Kraft unfortunately died. In the 1960s, the product development became intense and fruit jellies, fruit preservatives, marshmallows, barbecue sauces, and Kraft shingles that are individually wrapped cheese slices were launched. Also, the company expanded in many markets worldwide, the transformation from dairy to food company. In 1969, the National Dairy Company was renamed to Kraft Co. Corporation. This was because their operations had taken them far afield from the regional milk and ice cream business that was started in 1923. They had shifted their focus so far away from the original dairy products, the National Dairy Company was no dairy company anymore. At the very most, the cheese company. In 1976, the name was adjusted to Kraft Inc. to emphasize the well-known trademark. In 1980, Kraft merged with Dart Industries, at the time the maker of Duracell batteries, and Tupperware plastic boxes to form Dart and Kraft. Later that decade, the Dart and Kraft spin-off, the lagging non-food business, the spin-off was later acquired by ETW, Illinois Tool Works, and became Kraft Inc. once again. In late 1988, Philip Morris purchased Kraft Inc. and merged it with its own General Foods unit to Kraft General Foods. It was in 1995 then renamed to Kraft Foods. In 2001, Philip Morris IPO'd Kraft Foods in the third largest IPO of all time, returning an 88% stake in the company. Then, in 2003, Philip Morris was renamed to Altria, and they still are Altria to this day. In early 2007, Altria sold all remaining Kraft Foods shares to its shareholders. Then, that's how Kraft Foods became an independent, publicly held company. After a period of poor share performance and investor criticism, the company proposed to split into two new entities. The first entity would retain the Kraft Foods names and brands and focus on the North American foods and groceries business. The second, Mondelez International, would focus on the global snacks and confection business and global brands. Mondelez is formed out of the two words mondo for world and delicious. Mondelez. Mondelez International would be the legal successor of the Kraft Foods, of the old Kraft Foods, while the grocery company would be a new company, the Kraft Foods Group. The split was completed in October 2012. It was structured so that Kraft Foods changed its name to Mondelez International and spun off Kraft Foods Group as a new publicly traded company. So don't get fooled by the long stock and dividends history of Mondelez International. In 2015, Kraft Foods and Heinz merged to Kraft Heinz. The Heinz company was at the time owned by Berkshire Hathaway and 3G Capital, and therefore Berkshire Hathaway owned 27% of Kraft Heinz then too. This is also how Warren Buffett got involved with Kraft Heinz. Kraft Heinz, they make about the same revenue today, but have not really been able to turn a consistent profit. You can understand Kraft Heinz as the somehow sister company or a stepsister company of Mondelez, if you like. Then now zooming in closer on the Kraft Foods split, now in terms of the actual brands. The Kraft Foods Group, as I said before, retained the Kraft Foods names and brands and focused on the North American foods and grocery business. Mondelez International got the global snacks and confection business and the global brands. However, this graphic you see right here is not entirely correct because some brands went on to be sold by Kraft Heinz and Mondelez. One of those is the famous Philadelphia cream cheese. Philadelphia is the best sold cream cheese in the world. Kraft Heinz serves the US and Canada, whereas Mondelez serves the rest of the world. While I was grocery shopping, I did my own research and found out that Miracle Whip is likewise being sold by Mondelez in Germany, whereas Kraft Heinz sells it in at least North America. And then while browsing through the frozen food section, I found out that Mondelez licenses their brands to other manufacturers for other products, like this ice cream cake we see here. These were not produced by Mondelez according to the backside of the packages, but then most likely licensed. We already moved far away from the split and towards the Mondelez brands. Let's look at them. Mondelez manufactures chocolate, cookies, biscuits, gum, confectionery, and powdered beverages. They might venture into the cakes and pastries and snack bars market, as the management said. Mondelez also holds a stake in JDE Peet's. They produce coffee and tea, and this company, JDE Peet's, contains Mondelez old coffee business. We're going to talk about that in a second. They also involved with a stake in Keurig Dr. Pepper, a beverage maker. Keurig Dr. Pepper again owns the brands above and also many coffee brands. Mondelez is the global market leader for biscuits. Biscuits meaning cookies and crackers. They are the number 2 for chocolate and gum and candy in terms of market share. Here you see the Mondelez brands next to the business units they belong to. Mondelez is the number 1 for biscuits and the number 2 for chocolate and gum and candy in terms of market share, as we already saw on the last slide. However, we will see that market leadership does not mean owning 80% of the market. Mondelez only owns about 11% of the biscuits market. That's the second biggest overall market Mondelez is active in terms of market size. As you can see here, the biggest market is chocolate. However, Mondelez is not the market leader there. I'm not quite sure who the market leader is. Might be Mars. But then chocolate is the biggest overall market, and then they also hold about 6% market share in the candy and about 20 to 21 market share in the gum market. And this slide right here is the reason for the many mergers and acquisitions that are undertaken all the time. The markets are highly fragmented and one has to fight and to acquire to keep one's market share rank. Next, we are going to look at where the Mondelez revenue is coming from in terms of the region. This graphic tells you international. 75% of Mondelez revenue is made outside of the USA. In return, 25% are made in the US. As a reminder now, Mondelez headquarters is in Chicago, Illinois, USA. Developed markets make up 63% of Mondelez revenue. And the largest market, the largest developed market is North America, USA and Canada and the UK. Emerging markets make up about 37% of Mondelez revenue, but this is where the Mondelez management sees significant headroom. The biggest revenue growth was seen in South America last year and the EMEA region. First time I ever hear that, so that stands for Africa, Middle East, Europe and Asia. And this graphic also tells you that outside of the USA, emerging markets and developed markets are equally important. Both contribute about 37% to Mondelez revenue. So in consequence, this is developed outside USA, this is emerging outside USA, and this is USA itself. Now, the claim of the Mondelez management is that snacking is a growing behavior and therefore they feel comfortable to forecast robust snacks category growth. So what are snacks? Snacks are biscuits, chocolate, gum and candy. Basically everything but cheese and grocery and beverages of their portfolio at least. The story behind the growing snacking behavior is the following. Multiple small meals are becoming more important than fewer larger ones, and this trend is even increasing towards younger generations. A quick side note, Mondelez, they have a good introduction PDF to Mondelez International on their investors website. They publicize their ambitions and goals. Mondelez seems to be value reporting, so they try to make it easy for potential investors to understand the business and voluntarily publicize more information. Speaking of publicizing goals, they clearly lay down their financial targets, as you can see on this slide. 3% organic net revenue growth is what we just saw on the slide before with the snacking trend. Then HSD stands for high single digit, so 7 to 9% adjusted EPS growth. Sounds pretty promising for such a conservative business, although watch out for these non-GAAP measures like adjusted EPS, since we never know what they are really adjusting for. You now should ask yourself, however, how can the dividend growth be greater than the adjusted EPS growth? Currently, they are still exploring new consumer segments. In the future, Mondelez wants to get to volume-driven profitable growth. Therefore, they need less capital for capex, and they can make use of volume leverages. To achieve volume growth, they want to increase advertising and core investments. So if you remember the history, that would mean we can expect only a few more M&As, but they generally seem to be in calmer waters now. If Mondelez is currently on track to achieve these goals, we will see in a few slides. Stay tuned. Here I collected Mondelez major competitors for the respective categories, pointing out again that the 2019 revenue for Mondelez was about 26 billion. And then talking about the major competitors, maybe Nestle is about 3 times as big, however their focus is not really the biscuit sector. Pepsi is about twice as big as Mondelez, and they are more oriented towards snacks. Of course they also have drinks, but in the grocery, in the snack business, they tend towards that. Then Kellogg's. Kellogg's is about half as big as Mondelez, but has a similar focus. So maybe that's the one you could compare best to Mondelez as a whole. Yeah, and then let's only focus on Kraft Heinz again. As I said, they have about the same size in terms of revenue. They made 25 billion in revenue 2019. Different product focuses, however, and a different regional focus. As I mentioned before, Mondelez International is the legal successor of the old Kraft Foods. However, we will only look at the true Mondelez history here that starts with the completion of the split in October 2012. Yeah, completion of the split here in blue. The first plans of this split were publicized in August 2011, and you could already see the first consequences, foreshadowings, in late 2011. So this is the revenue, basically foreshadowing and telling you that there is some internal construction going on. The actual fork was only completed in April 2014. In the second half of 2015, Mondelez disincorporated their coffee business, as we saw before with JDE Peet's. To me, this marks the end of the remodeling process. So this was when the fork was practically more or less completed, and then they also disincorporated the coffee business. So in my point of view, this is where today's Mondelez really starts, and this whole time period is more or less remodeling. In the end of 2017 then, Dirk van de Put succeeded Irene Rosenfeld as the new CEO and still holds this position today. So in the following, I'm going to zoom in on the time after the formal company split in October 2011. Now, if you first look at this slide, first try to spot any COVID-19 repercussions. To me, this is a perfect example of a non-cyclical company that is less sensitive, or basically not sensitive at all, to economic cycles. Therefore, such companies like Mondelez in general play an important diversification role. So COVID hit about here, and you don't really see you can't see the revenue going down. Actually, in Q3 2020, just recently, Mondelez was able to increase the revenue year over year by about 5%. Yeah. Also, in Q4 is always the strongest. Yeah, as we saw here, see here, yeah, Q4 is always the strongest quarter in terms of revenue, probably to the due to the Christmas chocolate sales. And Q4 is still ahead also for this year. And I calculated there's about a 10% variation between the strongest quarter, Q4, and the weakest quarter, Q2. That was all revenue, okay? So in revenue, it's very hard to see. But now let's also look at the annual revenue trend. This is quite funny because on the annual revenue level, we see how the yearly revenue was nearly perfectly stable in the last 4 years. Like, look at that. And that's after, I believe, the remodeling process was mostly done after this incorporation of the coffee business. For 2020, Mondelez already reached about 75% of last year's revenue after 75%, so 3/4 of the year. This might not seem to be too amazing, but you have to consider that the fourth quarter is always their strongest quarter in terms of revenue and still to come. So in my opinion, Mondelez is good on track for a good result in 2020 and maybe even the greatest annual revenue in 5 years, crossing the 26 billion revenue mark. The company really did not get hit hard by COVID in terms of sales, but now let's look at the net income. After receiving the Q3 results a couple of days ago, Mondelez now sits on 63% of last year's revenue after 75% of the year. Consequently, we see the short-term outlook improving, but in terms of net income, 2020 is most likely not going to be a record year. As I said, for the revenue, the best quarter has always been Q4, but in terms of net income, Q3 has always been the best. A good Q4 might still be yet to come. On the bottom line, Mondelez might still be able to make 3 billion in net income for 2020, my rough estimation down here, which is still a sharp decline of about 20% compared to 2019. Yeah. My assumption is that Mondelez is able to generate record sales, but because of multiple costs related to COVID-19, they failed to convert these sales into a record profit. However, a minus 20% bottom line might not be too bad for a non-tech but industrial company in 2020. And you have to also consider the rapid growth in the years before with a CAGR of 35%, but we're getting to that too. Now here's a snippet of the quarterly net incomes for 2020. We can see the year-over-year decline shrinking from 32% in Q2 to minus 13% in Q3. Yeah, so we have a shrinking trend, and this is considered good. I would assume that this trend continues in Q4, and Mondelez can reach about roughly the 2019 net income level of close to 700 million USD. Operating income, basically the same as the net income chart. This might support the growth in cost thesis that also led to a decline in operative income. Now let's have a quick look at the stock trend. From October 2012 to October 2020, Mondelez slightly outperformed the S&P 500, which delivered an annualized return of about 11% in this period, whereas Mondelez returned about 12% annually. But may I quickly remind you, past returns are no indication of future performance. Take that as you like. You can see that since 2017, the revenue stayed flat, but the company became more productive and therefore was able to squeeze more net income out of the same revenue. You see the revenue stays flat and the net income is rising. In 2020, that changed, of course. The question is, how quick will they get back on the very productive path? I get the same impression here that after all the back and forth with huge mergers and spin-offs, the dust has settled now and Mondelez can mainly focus on executing and is continuing to do that while also the COVID-19 dust is settling. Talking dividend, Mondelez has an impressive dividend history and especially a growth rate of average growth rate of 12% in the last about 8 years. Because I said before 2012 it wasn't Mondelez, it was Kraft Heinz, not Kraft Heinz, but the Kraft Foods Group. Just recently they increased the dividend again by 10.5% in Q3 2020. And here you see all percentage changes. How is such a growth rate possible in such a conservative business? I'm talking the average 12% dividend growth rate per year. The dividend growth rate was made possible by a net income compound annual growth rate of about 35% from 2016 to 2019, as I said here already, yeah. With a net income CAGR of 35%, you are just able to pay a dividend CAGR of 12%. Yeah. And as promised, we are revisiting this slide. Are they currently on track to achieve those goals? 3% organic net revenue growth? Not really. Revenue is pretty flat. However, even in 2020, you can see signs of this improving and maybe see a record revenue for the last 5 or 6 years at least. High single digits EPS growth? Yes, even 35%, not only 7 to 9%, no, 35% in the last 4 years annually. Obviously, this pace is not sustainable long term and was crushed in 2020 by the COVID impacts. Dividend growth rate greater than EPS growth? Nope, but this is a good no, since this is because of a very high EPS growth, and no one can really complain looking at the 13% or 12% dividend growth rate in the last 5 years. The current dividend yield is about 2.2%, talking the end of November 2020. The ceasing of the repurchases in Q2, down here, yeah, and the reiterated clear goal of dividend growth greater than adjusted EPS growth reinforce my belief in Mondelez's commitment to a sustainable and growing dividend. Here we're looking at the price to earnings ratio trend of Mondelez stock. Focus on the right side from roughly 2017 and let alone the restructuring period on the left. Mondelez is currently sitting at about a PE of 24, just a few companies for comparison's sake. Kellogg's is sitting at a 21, Nestle is sitting at about a 23, Pepsi is sitting at a 28, Coca-Cola at a 24, so not very cheap. Maybe slightly expensive even. However, one could believe that Mondelez has more growth to come than many of the companies I just mentioned. What would justify a higher PE ratio? This is truly the case. Only future knows. Yeah. And this is it, yeah. Quick on the outlook. How do you like Mondelez brands? I really love them, and therefore I believe they might be able to capitalize on these delicious quality brands. Do you agree with Mondelez thesis that young people have multiple snacks a day, what will lead to increasing demand for biscuits? Do you think that Mondelez will be able to get into the developing markets? And then, which company would you like me to analyze next? Let me know in the comments down below. Lastly, remember, just be lecker. Bye bye.